then the only thing we really have to worry about is dividend. So I've seen someone ask the question, it was Regina, and she's not in here yet. We're going to be using IBD today for our filter, right? Because we can literally trade anything when it comes to options. We can go long, short, sideways, long and short, but not sideways, sideways and up, sideways and down. We can, you know what I mean? Like every single chart we look at, like, oh yeah, we could trade that. Well, that's true, but we need to be able to draw a line in the sand somewhere, right? And at what point do we do that? So, you know, depending on the kind of environment that we're trading in, one of my go-tos is trading on the fundamentals. And there's been a lot of talk in the last 2 weeks about growth versus value. And well, when you're looking at it from that point of view, fundamentals are like the top rated thing. IBD is my go-to for fundamentals. When it comes to trading, I really struggled with the fundamentals for the longest time. I found them complicated and nuanced. You know, I would read an article and they'd say do things this way, and then I'd read another one and it'd say to do it another way, and I just found it really complicated. So I picked IBD as kind of my go-to for just giving me a solid number. You know, give me a number that says this is a strong foundation. It's got a good fundamental, you know, and then if it also has a chart set up, then we can take that trade. Cool. So they have what they call the composite rating, and that is like the aggregate of all of these other ratings. So they look at these 5 and then they wrap it all up together and they give you just like the number. So this 99 is really the only number that we need to focus on. These others are fine if I wanted to go in, you know, and like make sure I was trading things in the top of its industry, or trading things that had a relative strength that was really strong, or if I wanted to target something with, you know, a good earnings per share. But by focusing on the composite number, we're literally hitting all of them, right? And the bad thing about doing any kind of stuff like that is that you can filter out things that you would have traded, right? That's one of the worst things about using any kind of filter, is that you could accidentally remove something that you would have traded if you'd have just seen it. It's one of the reasons that I don't like to use a lot of filters if I'm, you know, like building watch lists or scans. I don't like scans that bring me something. I would rather use scans that eliminate something, you know, like eliminate something that's not liquid enough. That way I don't even waste my time looking at it only to find out that it's not liquid enough to trade, for an example. All right, so I wanted to give, you know, everybody a few minutes to show up. It's kind of light out there. A lot of people are still not really interested in the swing trade at the moment, and I totally get it. It's hard to want to try to swing trade in the market conditions that we're in, but we don't have to be bullish on everything, right? We can go in and put trades on that are kind of neutral to bullish or neutral to bearish. So we'll just let it go a few minutes for people to show up, and then I'll start building trades. I don't want to start and then have to back up and like go review trades again and re-explain things. So we'll just kind of hang out for a minute, talk about filters or scanners or whatever it is that you guys want to talk about. If you have a question, by all means, ask questions. Otherwise, once we get started, it's going to be kind of fast paced. The goal is to put some trades on, right? So we're not going to just be sitting here analyzing a bunch of stuff. We're going to be focused on building the trades, getting them put into the dome, trying to get them trying to get them on, right? IBD is pretty cool, but it is expensive. I get it totally. I know a lot of people don't have it just because, you know, it's more of a portfolio builder than it is a day-to-day trader. And, you know, more people at the Bullish Bears trade than they do seem to be building in their portfolio. Let's see what the stock of the day is while we wait for people to show up. Zim is yesterday's stock of the day. The nice thing about the stock of the day, if it was good enough yesterday, it might still be good today. IBD is weird, and it was a little hard to kind of get used to buying at the highs. That's something that I struggled with for a long time. I don't feel comfortable buying at the highs. You know, it goes against everything in my system. Plus, IBD is not an options trading place. You know what I mean? Like, they're focused on fundamentals, and when they throw names out, they don't care if it has liquid options or not. And the trades that they focus on, while they are starting to do option stuff, most of their stuff is stock related. And so they're willing to hang on to something that is kind of dragging its feet and not making moves the way we would want it to. So Zim, for an example, it's a shipping service. Shipping's been hot, right? Like, everybody's staying home and running shipping. IBD will mark out a zone or an area, and they'll say, well, anything in that buy zone, that breakout zone, is a buy. Okay, I mean, yeah, right. And one thing that they focus on frequently is that when the market, and I mean, quote, the market, something like SPY, QQQ, when the market is not trending, then trying to start new trades in something like Zim may struggle. And so they talk about using a reduced position size, starting out small, slowly looking to build back a good portfolio as the market gets into a good new strong trend. Well, we're in that transition phase, right? Go over and kind of do a quick evaluation on SPY. We don't have to, because they do it, right? I can show you where on IBD they tell you where the market is, but we're not at the highs and we're not at the lows, right? We pulled back and we are not in a trend. So they would say you can start new trades in that situation, but you need to approach it with a little bit of caution and be prepared for a lot of them to fail. That it may start the breakout and then just fail again, right? And they really are focused on like 3 main patterns, one of them being breakout stall new highs, cups, basing patterns, that kind of thing. 3 more minutes and I'll go ahead and get started, just giving people time to get in here and get caught up. So what I did for that watch list is I went over to IBD. I went to the stock screener and I've built my own. I built one that it's kind of aggressive, and that narrowed down everything out there to these 20 names. If we get through these 20 names and we really don't find enough trades, then we'll go to my next default watch list and we'll go down that list and kind of see what we can find there. I can tell you already that, you know, we want to see positive price action with positive volume change, right? That's kind of their go-to. Since we're trading options, we don't have to hit everything the way that they hit it, but we already know that we've got a high composite rating, so that's a good start. And again, we're focused on these because of the market conditions where everybody's arguing against growth versus value. As a newer trader, I didn't quite grasp that logic, that there is a difference between growth stocks, quote, and value. And then how do they earn that name, that rank, that rating as a growth stock or a value stock? And the confusing thing is when you're trying to learn this, depending on where you go to learn about it, somebody may talk about it with settings or criteria that you go somewhere else and it's different. And then you're thinking, well, wait a minute, this other dude, you know, they said it was something else. The really nice thing is there are default growth and value symbols. So you can like go to SPX growth and you can go to SPX value and then compare those two to each other and see which ones are doing better. All right, I think it's close enough. Again, at any point you guys got questions, just reach out and ask. We're going to mostly be focused on things that have liquid options, and that list that I just shared and that we went through, they are not options specific. So you can see, for an example, I brought up Zim. That was their stock of the day yesterday. It doesn't have options that I would deem appropriate for trading. If I wanted to do like a stock option combo, a wheel strategy style thing, this would work, no problem. But if I'm looking for like momentum or trend and a less than 30-day options trade, this will not do. It's against my rules. AOSL, we got a head and shoulders on the daily chart, and we've just made contact with the 50 SMA. It is very likely that we're going to get the other shoulder, right? A little bump back up to the upside, and then that move to complete the rest of the head and shoulder. And it could take quite a while to unfold. It's a daily chart. Daily chart patterns take time to unfold. So at this point, it'd be the argument of, well, should we be bullish or should we be bearish? And does it have the liquidity? It also has earnings. My own personal criteria treats earnings as a unique and specific thing. If you haven't been around on some of my streams before, I'm very biased on earnings and I'm very straightforward about it. You cannot tell me where we're going to go when they report. And you can't do that because it's not what happened during the last quarter. That's not the only thing that they report. They're also going to report what they expect to do next quarter, and that's a closely guarded secret that they don't share. So you have no damn idea where it's going to go. And if you do take an earnings trade, you are gambling. Period. End of story. I don't argue about it. I don't really even care to, have a debate about it. You can't tell me that where this is going to go. So if you take a trade before an earnings announcement and you use those options within that window that I have marked, which is 10 days before and or 10 days after, then you're just gambling. There's nothing wrong with gambling, by the way, right? I'm not against it. I'm just saying it's not going to be done with like any form of technical analysis, because no amount of technical analysis in the world is going to tell you what will happen when they report, right? So get that idea out of your head. If you reach past that zone, however, and you trade options on the other side of it, so like we could use March options, then it's fine, no big deal, because we'll be using an options that can be adjusted or rolled or changed or manipulated. So AOSL doesn't have options we can use. We're just going to go to the next one. SGH also kind of has that broken head and shoulders pattern. We are kind of running along that 50. We're past the earnings, no issue there, but we do have a stock split coming up. All right, so we're going to pass on that. WAL, Western Alliance. So we got a very narrow cup, almost a V-shaped pattern. Earnings in literally days. Let's see if it even has. No, we can just skip it. This may be a short list and we'll just go on to our next list, right? I chose to start with IBD because we want to focus on growth and value, but if it doesn't have what we're looking for, then we just move on, right? And if you get into the habit of doing this, you can move through the lists really fast and still get on 10, 12, 15 trades by the end of the day, because we're not going to get hung up on a bunch of the little nuanced pieces. They just don't matter. I've proven that so many times. Okay, so this isn't super liquid, but it does have weeklies. And we can reach past that earnings comfortably enough. So now we got something that we can focus on. We want to recognize the move in the last 3 days off of that 50. If this is a momentum play, we're just about out of it, right? It comes down to like, and I'm not a candle counter by any means. That's not my jam. I know that there is logic out there, plenty of places that talk about, counting how many candles in a row or one color. It's not my thing, but just kind of think about how far have we gone and how likely is it that we're still going to have energy when we get to the top. You can see that we rejected against a pivot minor today. Even if we did manage to make it through there, we've got one more at the 440. I'm down though for a short duration compression trade. So we come in here and take a look at KLAC. We've got an IV percentile of 50%. So let's look at short duration, maybe cut these options down a little bit. Yeah, it's $2.50 wide. That's not too bad. Let's go ahead and try to put on an iron condor, at least price it, right? And kind of see if we like the pricing model. $2.50 wide, and they're offering a pretty fair value. So we're risking 90 for an opportunity to make 160, but that's a very narrow iron condor. Let's see if maybe we can widen it out a little bit. Of course, when we widen it, we're going to increase our risk a little, but it's the knobs that we have to turn, right? Like we can increase our chances of winning and decrease our profit, which also increases our risk. So we just turn the right knob in the right direction, and everything's on us to choose how much risk do we want? How much reward do we want? What kind of win rate do we want? One single trade, one single time doesn't technically have a win rate number, but statistically speaking, if we built trades this narrow with this wide of a trade time frame, what we'll find is that we'll lose or win on a percentage that matches perfectly. One thing I can point out is that the trade defaulted above the current price. So we need to fix that. This isn't even built in the right spot. Thinkorswim built it in the wrong area. So let's drop this down to 30, which means we need like a 32.5 there. And maybe we'll just come back and tell it to build it in the right spot. $2.50 on the top side. $2.50 on the bottom side. Man, that's a lot of credit. I bet that ain't right. It's got to be because of the liquidity. There's no way we're going to get that filled at that value, right? We're 250 wide. We're not going to get a 250 credit. That's just not going to happen. So if you're wondering, well, why is it doing that? If it is so illiquid that there's no volume to track, then people can put their own price on the bid. And so the spread gets really wide. Notice there's just no volume, right? And that makes a really wide bid-ask spread. And then we get an inappropriate credit value. So we either have to change expirations or walk away from the trade. 9 days out, if this was an appropriate thing to trade, it would have plenty of liquidity. And the fact that it doesn't means we're not going to trade it now. We're just going to go ahead and let it go. If you still wanted to do something in like stock, it'd be, probably fine, but there's no reason to argue with it. The liquidity is not there. Just move on, right? Just like that. Just move on. So never mind on KLAC. ANET. Check for liquidity. This is starting to be a little bit of a theme. Not much. Man, I think we're going to have to just abandon this IBD list and go with something else. Applied Materials, AMAT. We've got volume. We likely have an open interest. I didn't bring it up, but I'm sure we do. That'll do it. That's a good start. So we had a little fake out breakout, retagged. The lows ran back up again. It's crisscrossed that 50 enough times that there's no more respect for that moving average. And we are just now coming into some resistance. 3 days of some serious push here in the flow. It's not looking too bad. Very likely going to stall in the next few days. It's worth a play against that. Something like the 162.5, 165. Maybe just kind of price it and see if we like that. Oh, not really. No, $2.50 wide means we have $2.50 at play, and they're only offering 64 cents. Let's step one more closer. It's a little bit better, not much. You're basically risking $1.50 to make a dollar. It's not bad. I know a lot of people want that 1-to-1. With this, the break even 160.94. We're going to go one more forward and straddle the money. $2.50 wide. We'd expect $1.22 in credit. That should give us 158.75 for a break even. 158.75. That's 50 cents or 40 cents from our current location. So come out and take a look at that. We're basically saying we think we'll be back below the 160 in the next week and a half. It's very likely that we'll go through that first, but then we would be looking for the other side of that, right? To kind of pull back against it. Nothing really stands out on the news. That's not bad. Just out of curiosity to see what price is better, we can risk $75 on the other side by taking an out of the money debit spread. Rather than just drawing a line and saying, I think you will be below this line by X date, it would instead be saying, I think you're going to actually go down, right? Which is the play we're looking at anyways, that we're just going to maintain this range. We could try to put on an iron condor too. But if we did the iron condor, I'd want to add more time. The thing is, time is an issue, right? See how we've got the 17th, 1 month. Not enough liquidity to go out there. So we either have to use this one that we're in 9 days out or jump past it and go all the way out to like March or April. And I don't want to do that. All right, AMAT, I went with the 160, 162.5. It's not filled yet, trying to get it for near $1. Obviously, the more credit you get, the better. I'll post this in here, and if we get filled, it'll get added to system trade history. Broadcom, AVGO. Earnings is in March, so we can actually step this one out a little bit more, try to use those February values. Reasonably decent open interest. I mean, triple digits on the put side, triple digits on the call side. Not a lot of volume per se, but it's not looking too bad. We could try maybe checking a few more series. Let's get that out of the way for a minute. That should reduce how many total, yeah, say 45 days. Now, when we open it up, that's all we're going to see is those 45 days. We can kind of go through it quicker, looking for what we want. January 21st looks good. The 28th does not. February 4, no. The 11th, no. I mean, the 18th. So this thing is like barely meeting the requirements, right? Shoot, I think I did that the wrong way. There we go. Since right now it seems to be, a lack of volume, we'll just do it that way. So either January 21 or February 18, there's a little bit of liquidity on each side and enough open interest to validate the trade. We got a little bit of an ugly head and shoulders, a gap that is not quite filled. They've threatened the 50 and haven't hit it yet. We're getting a little bit of a bearish pennant. And that was a really nice gap fail today, right? It gapped up this morning, faded back down, but look where it's rusting. So I don't want this today. I'm going to go ahead and point it out for tomorrow. This is a red to green setup. We're going to be focused on this tomorrow. Put it on your watch list for things to watch in the pre-market. What you're going to be looking for is this thing to rally up just like it did yesterday, or just like it did this morning. It closed down there and it opened up here. Now it tried to go from here and it couldn't do it, right? It just kind of faded back down. We want to look at this again tomorrow, see if it can do the same thing again. It's kind of like kickstarting an old bike, right? You don't want to choke it. You got to keep kind of trying to feather it a little bit till you finally get it going. Look for this setup again tomorrow. Close in the lower portion of the day, open up in the pre-market with a gap up, and then we open, and what we're looking for tomorrow is a break above today's high. So just put it on the watch list and we'll look for it tomorrow. LRCX. We're not at the top. We're not at the bottom. We do have earnings in January, which means February's free. See what an iron condor looks like. So $5 wide strikes. Keep that in mind. If you're trading in a smaller account, this may be a little bigger than you want. It's offering a really nice price already. We've got enough skew that those calls are pricing well, even that far out of the money. Again, that credit value is just wrong. They're offering way too much credit, or we went way too narrow. All right, I'm at filled. Let's go back over there. trade price is in the wrong spot. Guess we could just get it out of the way and make it easier. All right, filled for 98 cents credit. Put that in the trade history. We're going to plot these break evens and then see what we need to do about it. What we got to do to the trade. Do we got to widen it out? Whatever. Okay, with the lines that I already had drawn, kind of took me a second to find what we're looking for. It's these two black lines. With my mouse out of the way, they kind of show up a little better. That is more narrow than I was looking for. So we definitely want to widen it out. Price is right there. So we want to try to keep price in the middle as much as possible. Thinkorswim has just been a laggy bugger. All right, we're still very narrow and it's still pricing an amazingly crazy credit. So we're going to get a little more extreme this time. Really take it out a ways. We're looking more for, you know, like a 1-to-1, right? This one's 315 profit, 158 risk. We got to adjust that upside. Let's take it to like 750. 755. I'm a little heavy on the top. See where that plots the break evens. Everybody following along with what I'm doing here? You got questions? By all means, ask away, right? Okay, so those are the two break-even lines at this point. 750 and 630-ish. All right, it makes sense to have the top side a little aggressive because we do have earnings coming up. So, you know, we're a little farther away on the top than we are on the bottom. That means we're not delta neutral, but we're in a pretty good spot right there. This is risking 275 to make 225. And we could try to get a little bit of that credit back. And to do that, we would want to adjust the top side just a little. Now we're very close to a 1-to-1. We're risking 255 to make 245. We won't make 245, but we won't lose 255, right? You know what I mean? Like we're close to being centered, but neither one of those values are our targets. And it's still top heavy because here's the current price. If you think the risk is to the downside, then instead of being long more top side, you would want to shift those puts down one set of strikes And then you'd have to, of course, bring your calls down one set of strikes. So let's put these break evens on the chart, and then we'll just go get this one filled, or at least get it on the dome to get filled. Start working that order. Okay, so those are the lines drawn. That'll be where our iron condor is. Just to make it a little clearer, put a box on it. It has to stay in that box. Not asking for too much. So we're going to put this trade on, and the risk is, well, what if it breaks one side or the other? Should it do that, we will roll the other side. So if it breaks out of the top, we won't adjust the calls, we'll adjust the puts. If it breaks out of the bottom, we won't adjust the puts, we'll adjust the calls. So just to be clear, if this, is getting challenged, that doesn't mean we're going to lose. It doesn't mean we have to close the trade down. It just means we may need to make an adjustment. And the adjustment that we're going to make is not going to be to fix the losing side. So we have, darn it, February 18, 74.5. $7.50. Now notice this orange line on my broker, that orange shaded bar, that is the expected move, which is $63. And we're building that iron condor right on the edge of the expected move. Expected moves are always projected to be bigger than what the market actually moves. So that's a good thing for us, right? 630, 635. And 745, 750. I seen those prices hitting 250. So I'm going to go ahead and set that order at 250, throw it out there, get a picture of this, and we'll move on to the next one. It is a working order. I'm not filled. Just to be aware. I don't know if they're having fun or not because nobody's talking. I kind of feel like I'm in here all by myself. I figured they're either all a bunch of antisocial freaks or I stink all by myself. Maybe I stink. They don't like my deodorant. It's the smell of money. I know, right? I've been drinking coffee all day, so that's probably true. The wife stopped by the local coffee shop and picked up a coffee for me. And yeah, I love it. All right, so no volume here. We're going to skip. Another transport name. Blackstone. Let's see what we got. That was reasonable liquidity. Nice bounce on the 200. Got earnings coming up, so we're going to have to jump into February at least. We have a consistent, persistent move to the downside, right? You can see where the trend is going lower. We do not yet have a higher low. All we've got is lower highs and lower lows. So the trend is headed to the downside. If this is a change in market sentiment, meaning if we are looking at something that even for a few days that looks like that, we're going to have to go far enough out that it will have rounded over and made its next leg down, or it will have continued that move up. Let's price the move up and see against all odds. What do we got going on here? Capital Opportunities Fund. Oh, shoot. Let's see. I just don't know enough about the company. The options weren't overly impressive to begin with. $35.40 is near the top of that range for $50. I mean, I must have been on the wrong date. That's February. All right. $35.40 out of the money call option. Not filled, still working. Gonna give the other one a bump. Right. I have done videos on the analysis tab, by the way. And even in the introduction to options, we spent a whole afternoon. I wrote out the book, took pictures, explained each part and piece of the analysis tab, how to use it, how to adjust it, what to do with it. That probably carry a long ways. LIN. Really nice gap up this morning. We do have options, or we do have earnings in February, so we got to stay in front of that or jump completely past it. It's almost to where you can't see it, but little base break coming into resistance. The argument at this point is, how much more does it have in it, right? These strikes are way too wide for the amount of time frame we have left. So that's not good. 9 days with $10 wide strikes. Really bad pricing model here. Almost no volume. We're going to skip it. It's nothing there is good, right? Just walk away. All right, gap closed. Not perfectly, right? It kind of missed, but sometimes markets give it the wink and the nod. Now we're getting some better liquidity here. All right, $2.50 wide. We want to get around $1.25 in credit. I'm okay if it's a little much. You can see how the front side is shallower than the back side. So if we're going to make an adjustment, which we do want to do, we're going to move the calls. That's a little better. All right, those lines form the iron condor. That's the box, right? We got to stay inside the box. And again, depending on what's happening in the market, if this thing tries to outrun us on the top, then we will roll the calls, or roll the puts, not the calls. Okay. We never roll the side that's actually getting challenged. Simon Property Group. It's got the liquidity. It's got earnings that we can dance around. This same setup we have now seen multiple times today, right? We've seen that same 3-candle pattern all over the place and a bounce on the 50 in a lot of markets, because a lot of the markets just follow the indexes, right? And keep in mind, guys, I'm hedged, right? So if the market crashes and burns, I'm going to make money. If we don't crash and burn and the market rips to all-time highs, I'm going to make money. So it doesn't matter. Either way, I'm going to make money. If you don't have any hedges on, these are all a bunch of sideways trades, which means if we continue doing what we've been doing, these are going to work really well. But if the market gets a serious shift in sentiment, that's a lot of S's, and we crash and burn or just rip rally to one side or the other, these aren't going to work too good, right? Because these are all a lot of sideways trades. So just, kind of have a little gauge for the risk that you're building here. I know, right? One of the jobs that I used to have was narrating books to tape for handicapped children. And you had to enunciate really well. I really liked it. It didn't pay good though. The oil field paid so much better. Of course, the oil field is where I started cutting off body parts and getting exploded and falling from high places. And so on this, the front options don't look good, and we can't land in February. So I want to put this on the list for tomorrow. We don't want to trade it today. What we're going to be looking for is a red to green setup. We want to see this rally in the pre-market at least as high as today's high, right? We're going to be looking for an aggressive red to green tomorrow. What would be even better is if it rallies tomorrow higher than this pivot point back here, that 164.68. That would be a good start. Then after the market opens, look for any fade back to the pivot point, and then the long would come in. You can go long just straight up buying a call, but I wouldn't recommend it. These are wide, right? So an out of the money debit, more likely something in February's series. Still not bringing up. Thinkorswim is just being a dog lately. Oh, there wasn't a March. I don't like that at all. Talking about illiquidity. All right, so pass. Day trade it by all means. If you get that same setup tomorrow, just straight up buy the front options. You know what I mean? Like, don't even trip. What we could do. No, we can't, because I removed all the filters and there's still nothing there. I was going to say we could use something closer in, but see how there's no weeklies, right? It's got some decent liquidity for being a market without weekly options, but them rules is them rules. Aries management under the 50, nice double bottom, doesn't do us any good now. That was days ago. Triple bottom, now that we have more chart showing, we're coming up into resistance. So, you know, that fake out, I just know that crushed a lot of people today. Strong rally up in the pre-market, a little bit more at the open, and then it dumped down and smacked them in the face. Yeah, imagine that, right? I think we've all got caught in one of those before. I ain't gonna mess with that one. So that got us through IBD. And, you know, depending on the portfolio, if we were looking for different trades, that IBD list would have been fine. With the restrictions that we're running right now because of the sectors and the indexes, we're better off using the IBD and just, you know, tolerating the lack of choices that we found. But we went through it anyways. We've got a couple of trades cooking. So now we'll just move on to the Dow Jones Industrial Average. It is a really great watch list. If you're new, it's diverse. You know most of the names because they're like household names, McDonald's and Visa and Coca-Cola, JP Morgan. They're reasonably liquid products. The main thing that we continue to have to focus on is, are there earnings, are there dividends, and, you know, what kind of liquidity? Apple does have earnings, and there is a lot of things that kind of suggest their earnings isn't going to be that great, but that's just our bias getting in the way, right? So let's check those options out. I am already in an Apple trade, so technically speaking, I really don't need another one. AMGN, we're back above the 200. We've got that cup filled, got the handle out of the way. IBD would have something like this listed as a go play. Just a second, everybody. You're not going to hear my voice for a minute because I'm going to mute. Let's see if I can do this. All right. I don't know. It's the little things that just get people confused, I guess. there's just so many ways that, the other ways of doing things. Hey, you made it. Better late than never. All right. So AMGN, we're back above the 200. We've got the cup completed. We do got earnings to deal with. Just check the liquidity. $2.50 wide. It's not that bad. We either got to jump past February or deal with the short duration time frame. And like I was saying, IBD would have it as a buy zone, right? Like they would have this whole little area marked out and they'd say anything in there. We never made it through yesterday's price. So a little bit of a concern, kind of maybe put it on pause, look for this tomorrow to be a red to green. That would be a better way to do it, right? It's like the fourth name now on a watch list. What we want to see this do is see that long wick underneath that candle. We want to see this go ahead and close today, still red, and then open tomorrow right around in here. And if it can do that, we'll run the red to green play, look for a 4% move, take that from intraday options and then convert it into a swing if things continue to work out. Let's go back to CRM for a minute. We ran one trade on this a little while back, went short with it, worked out pretty good. The gap is still not closed. Nice little run up. It's that same 3-bar play that we've been looking at through most of the charts today. Kind of looking at this and asking a question, could we stay below the 245 and for how long? If we price it for the next 2 days, what kind of money would they give us? Oh, not very much. All right. If we price it a little farther out, risk $1 and a half to make $1. It's not that bad. So let's go ahead and take that number. Oh man, did they split? Or are they merging with something? Hold up, I seen that on the options chain. It's fine. It'll do. All right. Let's go ahead and price that gap close the other way. Rather than asking, can we stay behind it or underneath it? Now we can still run the iron condor if you want to do something like that, 240, 242, and then take the other side, something like 237.5, 235. That's really narrow. It's $10. I'm thinking that an out of the money call debit spread would probably be a better trade. Come on, Thinkorswim. There you go. Man, this thing is laggy today. Anybody else having this much issue with their Thinkorswim today? At first, I thought it was me. I shut it down earlier, and every time I shut it down, it's been taking like forever to get it to close. And then I load it up and it runs good for like 20 minutes, and then it's just trash again. It's just really been bogged down all day. Normally I don't. Normally my Thinkorswim is running really good. I even checked all my settings and nothing. I feel like I'm moving in slow motion. The only other thing I can think of to do is maybe I just got a Windows update this morning and it made me really late. Almost didn't get the morning briefing on time. So one thing I could do, I guess, try to do is maybe shut down this broker and open it on the other computer. See if that can speed things up. I don't think it's my machine though. I've got a pretty significant machine. No worries though, I'll still post the trades that we build and try to put on. So what I just built was an iron condor, and you can see the black lines. We're building the iron condor outside of the price action, right? And that's not right. So something didn't change when it was supposed to change. Notice the lines didn't get moved. Let's go in and tell Thinkorswim to do it again. Maybe it'll get it right this time. We want to move the break even, visually see those lines get moved, and then plot them onto the chart. Yay, there it is. So now 233 to 244 is the box. We're basically saying, I think it's going to stay inside that box. I don't though. I don't think so. Price wise, this isn't bad. The risk isn't that bad. But let's see if it can offer us a better trade if we went, say, out of the money debit, not out of the money credit, right? $2.50, $76 in credit. So you're risking $76 to make $1.75. $1.75. We don't get max profit, but we don't get max loss either, right? So this trade, you don't need price to actually get there. It can just get close, even just moving in the right direction. What it really prices at is how fast it moved in the right direction. Got filled on VX at $52. Let me get that posted into the chat. That was $52 debit. It'll be in the trade histories. That's a $5 wide trade risking $50. So it has a max profit of 450. We won't see max profit, but we're not risking max loss either. For this one, you know, we're right there at that inflection point, and I don't necessarily have a bias with it either way. I like the gap up this morning. It was a nice follow through. It held above the pivot from yesterday. but we're really struggling with that line from that shadow candle, right? So what may be better off is to let it play out, right? Like look for it tomorrow, because we could very easily just deflect here and come right back down. And this bullish exuberance could very easily run us right up into attempting to close that gap. It's a 50-50 play. There's no reason to take a 50-50 play, right? We'd rather stack the odds in our favor. So I showed both trades, whether you want the iron condor here at $1.55 credit or the debit here for 75. Either one of those I don't see as a negative. I would rather have the odds in my favor a little bit. Cisco Systems, really nice price action all the way up, broke the level, pulled back nicely to the 70 line. I'd rather have seen it stopped about 786, but it's fine. It's a daily chart. The follow through is looking good. Today's red day isn't that bad, but when we get a red day with this beautiful trend like this, and we're finally getting that pullback, all of this looks great. Even the pullback looks great, right? We want to see those kind of pullbacks because it validates the health of the move. If it was just some extreme, crazy, stupid, straight up run, nobody would want to trade it, right? And you wouldn't want to trade it, but it pulled back. It's healthy. That's a good thing. Wait for tomorrow's play on this red to green on Cisco Systems. If we red to green on this setup, we're hitting that 64 tomorrow, right? It really is that simple. If we red to green in this, we're going to 64, which means we have a chance from that to follow through above. So I'd rather not start the trade today, because if it does fail, then I'm just going to be mad that I missed an opportunity where I could have traded something better. And instead I'm stuck in a trade that I have to manage or adjust or manipulate. So this one goes on the watch list for sure. It's probably going to be my biggest name on the list tomorrow, one that I will pay the most attention to when we come into the open. Of course, we'll know in the pre-market, right? It won't be subtle. We'll know in the pre-market. So I just skip it and go on to the next one. This thing has just, what monster move, right? And it's not just this name, it's straight up energy in general. Oh yeah, I don't have the broker anymore. Gotta go to the other broker. Just checking to see if I already had a trade on it in that or not. I'm gonna use March. Because we don't want the February's. It's got earnings and we don't want to use 9 days out, right? So that puts us in March, 65 days out, $5 wide options, reasonably decent price, $83. So perfect. We're less than $1 in a $5 wide trade. So we're going to use the 135, 140 calls 65 days out. Get that picture posted for you guys. Oh, shoot. That's the wrong channel. It's not filled yet. We don't want to post it there. Sometime today, I can see it processing. It's just not posting. There it goes. All right. Well, today's stream didn't quite go the way I had wanted it to. I thought we'd have at least 10 trades on at this point, and it's getting to be past 3, kind of the cutoff time for me. So I don't really want to put on any more trades at this point. We'll doctor the ones that are already on, meaning are the ones we're trying to fill. We'll go in and give them a bump. So we go in and just hit the button that says, hey, I'm still here. Let me see if I can get a fill, whether it fills or not. And we can look at things that are primed for tomorrow, right? We've already gone through a couple of names on the list that I said should be added to your little watch list for tomorrow. That includes Dow Chemical. We're literally looking at a red to green setup here, a perfect red to green setup. The trades that did get filled, I've taken pictures of it, and they are in the trade history channel. If I fill any more, that's where I will also post them, is in there, along with any adjustments that need to be made, or if I close any down. Hopefully you guys are starting to get a little bit of a taste for how I trade these things, right? I know we haven't been having as many streams as I'd like, but like I said at the beginning, if the market's not giving me a chance to trade or not showing me what I want to see, then there's really nothing to stream, right? Because the idea is that we're putting trades on, not just having a stream where we're looking at things. That's what we do in the morning. When there's nothing to trade, there's no reason to stream. So we haven't been streaming as much as I would want. We're going to be having more of them though, because the current market conditions aren't going to last forever. We're going to be coming through the midpoint of the earnings and we'll really be firing up. CVX just got filled. Let me get a picture of that and get it posted into the channel. That was 83 cents on an out of the money called debit for March. It will help a lot when you guys get more familiar with the kind of the tempo and the speed of what it is that we're looking for, why we're looking at it, and then how we're putting these trades on, right? One thing, hopefully you noticed, I'm not sitting here spending a lot of time looking at a bunch of indicators, MACDs and RSIs and all that stuff. There either is a play or there isn't. We go check the pricing. We try to find ways to reduce the risk. We look at the most immediate things that are concerning and we either put it on or we don't. Move on to the next one, right? There's not a lot of value in, reviewing this thing for 30 to 45 minutes, going through the wishy-washy motions of, well, maybe kind of, sort of, the MACD looks a little bullish and could be some crossover, blah, 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 blah. It's junk, right? It's all junk. It's not to say that turning on those indicators wouldn't provide value, right? It's the idea of, well, what kind of trade are you trying to put on? How long do you think that trade is going to last? In the grand scheme of things, when you're on a daily and a weekly and a monthly chart, if you're trying to use those legacy indicators, MACDs, RSIs, stochastics, Sheffields, they're looking back at least 14 periods. That's 2 weeks, right? Really, it's 3 weeks in the market weeks. That has absolutely no bearing on what tomorrow's going to do. One thing that really freaked me out is when you start getting into like the CMT manual and the Chartered Market Technician certification, is they will literally zoom in and perform analysis of that much chart on a daily time frame. And they're only concerned with like, what's it going to do in the next 3 days? And then from those 3 days, right, your trade will either start to work out or it won't. And then, you keep it, adjust it, roll it. If you look at what got shut down in the last trade history, right, the last time we came in and ran these, within 2 days, I was shutting down most of them. They weren't following through and we just went ahead and shut them down. The stream before that, they were all hitting, right? And we held them longer, took them through their profits, and then closed them down as they came due. So it's just the next few candles. And when we're trading appropriately, The trade's not going to go to zero immediately. You've got time. Unless you're putting yourself in a very bad options position, these things are going to give you an opportunity to get out without getting hurt too badly. And that's the whole idea. Keep your losses small, cycle out, go to the next thing. No big deal. You fall in love with it, you hold it too long, you're scared of the risk, bailing out early, trading too big. And all those different things add up to just a disaster. So sorry we didn't get on more. We still have 2 that are working. And if they get filled, I will give you guys a holler. It's LRCX and Marvel that are still on the books, are still sitting in the dome to be filled, right? They're in the queue. Any adjustments that I make, guys, I will give you a shout out. And if you have any questions, it's what I'm here for, right? Like literally, I built this channel, the systems channel, to provide yearly members and now lifetime members with something that the others don't have. And everything is all contained right here. There is support. You got questions or you're stuck on something, ask it here. Trade histories, the streaming replays, and it will be in here because I recorded it. And then our own chat, right? So it's all self-contained in this one little unit, one little area. So that's it for me, unless you guys got questions. Yep. Y'all have a good one.